What is going on, guys, and welcome back to the second episode of the Quarantine Chats. Guys, I literally couldn't make this up. Today was one of the craziest days the market has ever seen. Because you guys might have had times when, your stock or your crypto dropped, 80% on you, maybe 90% on you. But what I would bet most people have never experienced in their lives, probably nobody has experienced in their lives, is their asset going negative on them. And that's exactly what happened today. You see a little red line over there? That's crude oil. Crude oil dropped today. It started the day at perhaps $18 and it went all the way down to zero. And most people thought, wow, awesome, I can get free oil. Maybe I can get oil for 1 cent. But it didn't stop there. The futures went down to about negative $40. And some people might ask themselves, how is a negative ticker price even possible? What does that mean? A negative ticker price means that you get paid to buy it and you have to pay to sell it. Now, a lot of people would say, well, sign me up. I want some of that oil where I get paid to have it. But there's a catch to that. Because the way futures work is that when you buy a future at the expiration date, you will exercise it. And exercising a future means you will get that commodity delivered. So where's the problem? Like if I had a gold future and it expired, it would mean that there's a truck showing up and delivering me some gold. Not a big problem because, $1,700 worth of gold is about the size of my thumb. And it's also not flammable. But those free $40 of oil come along with a 120-liter barrel of highly flammable, health hazardous, stinky crude oil that have to go somewhere. But there has been a rather big problem. As everyone knows, the most powerful economic principles are those of supply and demand. And they couldn't have been any worse for an asset than crude oil has been. On the one hand, we had a standoff fight between Russia and Saudi Arabia that led Saudi Arabia to more or less ramping up production and flooding the market with extra oil. So supply has been sky high, and it's been so high that almost all the supply houses are either full or at the very least spoken for, meaning that there's already contracts for that empty space from active producers. Now, on the demand side, well, we are in quarantine right now. There's a global pandemic, and let's take a look at what is oil even being used for. About half all of the barrels go towards making gasoline, okay? Another quarter perhaps goes towards making diesel, and then another small part goes towards making jet fuel. And then there's a small, tiny part, roughly about 15%, get used for things that are not fuel. So the vast majority of oil is being used to create some type of fuel. And right now, fewer people than ever are on the streets. Fewer jets and airplanes than ever are in the skies. So the demand for oil has plummeted. So you've got those two forces. You've got this immense flooding supply and this ever-dwindling demand, which has caused prices already to crash from the 60s down to the 20s. But now it's gotten to the point that nobody has anywhere to put that damn oil. So today, exactly that problem happened. Somebody has to take it. And it doesn't matter who you are, because whether you're the college student who decided to buy 10,000 barrels at 1 cent and then all of a sudden realized, wait a second, this thing ain't bouncing back. I now have the choice of either selling those 10,000 barrels at negative 40, meaning realizing a $400,000 loss, which he certainly doesn't have, or alternatively being forced to have 10,000 barrels of oil showing up at the storm. Yeah, there's going to be some crazy headlines coming. Get ready for it. Or even take it a step further, some of the biggest ETFs. A lot of the big oil ETFs, they're worth billions of dollars. And guess what? Those ETFs, for example, USO, control 25% of all the May futures. They're not in the business of lugging around barrels of oil. They're purely a financial business as an ETF. So what they usually do is they simply keep rolling over those futures, and they never plan to exercise them. And that usually works out pretty well because usually there's a very small premium on the following months. But today, a lot of those ETFs sat there and realized, holy moly, we have millions of barrels of oil that we either get delivered to our office here in New York and somehow figure out where to put them, or we're about to destroy this fund. Because think about it this way, if a fund had $200 million in $20 oil. And then all of a sudden, those May oil futures are at negative 40. Those $200 million in assets turn to a negative $400 million liability. Yeah, I would not want to be an oil fund manager today. But anyway, so that's history. That's what happened. Nobody really wanted it. Nobody knew what to do with it. So this whole debacle happened. People willing to pay to just get rid of it and not deal with it. Now, the irony is, as it stands right now, the June expiration futures are back to where they were before. They're at $21, okay? Because again, this goes back to now it's being a pure certificate. Right now, nobody worries about what happens with those barrels of oil at the end of the month. This might be a scenario that reappears unless those supply and demand economics get fixed, or unless there's new storage facilities being built. Either way, we're not out of the woodworks yet, because until the supply and demand has been fixed, the price of oil is likely to continue to decline. So, does it mean oil is a buy? Now, nobody knows for sure, but one thing I can guarantee you is that unless you have storage facilities, I'd be careful getting into oil, because as it stands right now, the supply is still sky high and there does not seem to be too many signs of an increasing demand. Many places around the world are still on lockdown until May 15th, and many facilities that produce oil have actually been working at reduced capacities already because of the virus. So the whole supply and demand side of things is not necessarily going to get better, so you might want to be careful. What I always like to do though is take a look at the ripple effects. You know, what else does this affect? And here's my top 3. Number 1, natural gas. Something a lot of people like to throw into the same boat as oil and gas, but they have an interesting correlation, because a lot of the gas that is being produced is actually what we call associated gas. So a lot of time when people dig for oil, there's gas that comes along with it that shoots out. And they have two choices. Either they just burn it off, which makes the flares that you might have seen in videos of Texas, for example. Or alternatively, they literally give it away. So a lot of the gas is given away for free by crude oil companies simply to take it off their hands. And sometimes they literally even pay to take it off their hands. What does that mean for pricing? That means the more crude oil is being produced, the more the price of gas goes down. So there's a funny inverse correlation. Many times when oil goes up, gas goes down. Why? Because when it's worth more, when there's a lot of demand, there's more production. And when production goes down of crude oil, many times gas goes up because there's less associated gas being given away for free or even given at a premium. So that's side effect number 1. Side effect number 2 is unemployment. Something we need to understand is that according to PwC, roughly 9.8 million jobs are being created by the oil industry. So at the current prices, at $1, $0, negative $4, heck, even $10, shale oil in the US is no longer profitable, which means those 9.8 million jobs are in grave danger. And this comes at a time when we already have historic levels of unemployment. For the past 4 weeks, Corona has wiped out between 3 to 6 million jobs every single week. Now, if we add another 9.8 to that at max with the oil industry, things are looking very bleak. It simply is another stressor that the economy really does need right now. Third and lastly, we need to evaluate how it affects the geopolitical landscape, because some countries that heavily depend on oil are Saudi Arabia, which is a powerhouse over in the Middle East, and Russia. Yes, good old Russia. Now the problem is, if those economies are heavily reliant on oil, and all of a sudden the oil business is no longer a profitable business, but rather a business that barely survives on the margins, we might see their economies at large suffer, and that can lead to civil unrest within their communities and also within the region, because both of them are powerhouses in their regions, and when they show a sign of weakness, there will be others to take advantage of that. So weakness in Russia can almost certainly be expected, because this is hitting Russia hard at a time when also COVID is peaking in Russia, because Russia is one of the countries with the fastest growth rate of cases at the time. Now, on the other hand, those countries that use, meaning the importers of oil, will benefit the most. For example, while all the Western countries are still under lockdown, China has started reopening its manufacturing. So China's business is picking up, but even to make it better, oil, which is used to make plastics, is now not just free, but they can get paid for acquiring it. So if a Chinese manufacturer took advantage of this crazy dive today, He could have made a killing because instead of paying $20 a barrel, he got paid $40 a barrel. Because not only did his cost of goods disappear, he literally also added additional revenues by simply acquiring the goods he uses anyway. This oil fiasco certainly isn't over, but what it really showed is that it's just another symptom of the instability that our world currently lives in and that the financial markets currently live in. It certainly shattered a couple beliefs. For example, that things can't go below zero. So, what are you gonna do? Are you gonna go buy yourself some barrels of oil next time we have a crash like this? Or what are some plays that you would like to do? I would love for you to leave a comment. How are you getting in on this action? Are you gonna short Russia? Are you gonna long China? Or do you already have 10,000 barrels of oil with your name on it being shipped to your door right now? If you enjoyed the session, please don't forget to like, subscribe, and I'll see you very soon tomorrow. Have a good one. Take care.